Good morning. We got 12 minutes until PPI. 12 minutes till PPI. Awesome. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. G'day, mate. How are you doing? Let's get on with it. We got big news, PPI. Today we'll be using traders.com. Where do you find more information about traders.com? You go to TRADARS.com, radars for traders. And then you need amazing execution. For that, you go to Traders Way. So we will be using the Traders Way MT4 today with my chart templates and stuff. Chart templates are available at investorbootcamp.com. But anyways, okay, analysis, execution, analysis, execution, analysis, execution, analysis, execution. TRADARS, Traders Way. TRADARS, Traders Way. Let's get a news update.
Markets wait for U.S. PPI data.
Euro-US dollar drops amid fears of potential EU-US trade war. US dollar in choppy mode ahead of PPI and jobless claims data.
Trump threatens heavy tariffs on French wines and EU alcohol.
President Trump threatens a 200 tariff on European wines, champagnes, and alcohol.
Germany's Merz. We have carried out good talks with Greens on financial package. Mexico industrial output, year over year, came in at 2.9% below forecasts, 1.8% in January. Eurozone industrial output rebounds in January.
Gold up near 0.50% on the day, while US diplomats visit Russia on ceasefire deal.
Oil prices would need to fall to 53 barrel for US CPI to hit Fed's 2% target, now CITIL.
How cool is that? Super cool. So, so look at that. So just while I was doing my other live stream focused on fundamentals, new news came out about tariffs on French wine. I bought French wine last night. Yeah. It was, mostly a Merlot with, I think it was 17% cab, some petite, what was it? Petite Syrah or anyways, nice little blend, little Bordeaux. So anyways, cool. Good for me. Nailed it. Like, dude, 12 hours later. 12 hours later, prices have just jumped. Nice. That's actually a history of port wine. I don't know if you know that, but there was a 100-year war between England and France, and England got all its wine from France. So for about 100 years, the British couldn't get any decent wine, so the only, once they drank their stock of wine down, so imagine all the rich people, they had a lot of French wine. Well, after 100 years, you don't have any French wine left. So what did they do? Well, at the time, sailors drank really low quality wine that came from Portugal. And it was low quality. You made the wine with the skins in there, and then you had to fortify it with some alcohol. And they're like, this was rock gut that only the sailors would drink. So the aristocracy in England started drinking it because it was the only booze you can get. And then suddenly, after doing that for decades, for, let's say, if that's what your grandpa did and then that's what your daddy did, guess what? That's what you're going to do. And this went on for
U.S.
100
commerce
years, right?
looting. Steel and
So anyway, suddenly it became a good thing. And now port wine is fancy. Yeah, I have like 50-year-old port wine that I'm going to keep till I die. So anyways, how interesting, right? So tariffs might force you to drink Napa wine, or God forbid, Red Tail out of Australia. Now get something from the McLaren Valley. Get some Shiraz. Yeah, there's some good wine from Australia. It's just not called Red Tail. All right, so anyways, that's what's going on. Nothing's right, I'm told. 7 minutes, y'all, all y'all. So what's going to happen? PPI, 7 minutes and 5 seconds. Let's take a look. If less than expected, basically no scalp. Done. If greater than expected, basically no scalp. Done. Oh. So if inflation's higher, many more opportunities. Let's see. There is a little scalp on euro dollar. And there's another one, Kiwi dollar. So, look. Do you want to buy Kiwi dollar or euro dollar? Well, I don't want to buy Kiwi dollar, so if it's greater than expected, I'll consider buying some euro dollar. All right, TRADARS, show me. Okay. Slow but up. Up. Slightly up. So this is telling us that in the past, more often than not, if it's greater than expected, this pair tends to go up, but slowly. Coming out now 5 minutes and 56 seconds. Slowly, so it's not much of a scalp. All right. What about a day trade though? What happens on days in which PPI comes out greater than expected for euro dollar? What are those days like? 83.3% of the time, the response is up. Show me. Okay. The news came out and eventually closed higher at the end of the day. News came out, up, down, but closed higher at the end of the day. Up, closed higher at the end of the day, up, closed higher. But notice like hours went by before it really started to make higher highs and higher lows. And going all the way back to May, same. It kind of farted around for a while and then kind of went up and then moved sideways for hours. And then moved sideways again for hours and closed lower. Right? Okay. So it's a better day trade more often than not. But 83.3% of the time in scenarios in which US PPI happen to be greater than expected, you want to do a day trade on euro dollar. If it comes out less than expected, don't trade euro dollar at all. It either doesn't produce volatility or it doesn't produce a reliable, repeatable pattern. Either way, stay away if it's less than. Oh my God! So we just went through years of PPI data organized by as expected, greater than expected, right? Less than expected, and then went through and analyzed every chart and organized them by pattern. And it took less than 1 minute. You now know more about US PPI than 95% of traders in the world. And it took you 1 minute. How cool is that? So we have UMITCH tomorrow. I actually don't care that much about it, but there is a reliable, repeatable pattern. So maybe that'll be good. You can do your analysis. Retail sales is a big one. And we have all the same details for that. So let me give you a little life hack here. Okay, you're like, okay, I want to trade this one. United States retail sales, put an alarm, and then the other thing that you could do while you're there is you can say, okay, retail sales, which one do you want to trade? No scalp, 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 scalp. Okay, so if greater than expected, sell euro dollar? No, I don't want that. Sell Aussie dollar? Sell pound dollar? No. Sell Kiwi dollar? No scalp. So I'm going to pick this one. So I'm guessing because, well, I'm not guessing because the other one is just not an opportunity for a scalp. So you copy that. You go back to your calendar. Okay, you put it in the notes. And then you say down. Save it. Put an alarm. Email me. I know I don't need to do it this way. Okay, email me 40 minutes earlier. Send me a message, and then I'm done. That is so freaking cool.
Trump threatens 200% wine tariff if EU does not remove whiskey tariff.
1 minute.
Sees pound US dollar dipping before year-end rally.
You guys excited? Make sure you click the thumbs up button. If you're watching the recording, in the future from now, if you're watching the recording, leave a comment just in the comment section. Say, hey, this is great. Awesome. Appreciate you if you appreciate me. We're going to start the final countdown. There we go, 59 seconds. Claims are expected to be higher. We'll see if those government workers, if they're filing. But the big one, is it going to be greater than 3 or less than 0.3? Well, we had it all planned out. And we realized, really, there's a day trade. Okay, a potential day trade. Not a scalp. Where do we go from here? 5 seconds. 4, 3, 2, 1. Play the jock jams. What is it? Wait for it. Wait for it. Wait for it. Still 0. 0. They did all the number crunching. They got 0. Well, 0 is less than expected. Yeah. Wow. Okay. A big old 0 on the PPI. Let's go to... Okay, let's go to it. Or the other thing you can do, like I have it here, right? Let's go back. Okay, less than expected. Okay, no scalp, no scalp, no scalp, no scalp, no scalp. No euro dollar. But Aussie dollar goes up. I don't really want to do that. Kiwi dollar goes up. I don't really want to do that. USD yen up. Don't really want to do that. Yeah, so it's just like, okay, I get it. You're right. I get it. I think I'll pass. Interesting.
PPI month over month, February, has come out 0%.
Analyst sees pound US dollar dipping before year-end rally.
It's good, isn't it? It's so good. So by the way, how do you use this page? You launch this page, and then you do this. And now you can just listen to the news while you trade. So let's check what's going on. What is the response? Dollar strength. Okay, dollar strength. Are they all on the hour yet? They're all on the hour. Okay, pound has a recovery going on. Euro has given back the strength that it had. Interesting. So euro dollar actually is more down than we had before. See, if you look at the longer term, we had these. Oh, thank you, Adam. I appreciate that. Okay, so you see on the longer term, euro strong. And you can see how weak the USD is right now. Yeah. So I'm still in the business of selling Aussie, selling Kiwi, selling CAD. Even if that's not working right now or not working today, if you only look at small time frames, you would say, oh, well, euro is weak. It is? Yeah, but things may be changing, you see. Will it continue down? Well, it did make a higher high. So the question is, are we going in this direction at some point? Has something changed? Maybe. Okay.
Jobless
what's
claims
next?
inched down to 220,000 in latest week. United States continuing jobless claims came in at 1.87, below forecasts, 1.9 million in February 28th.
Wow, did you hear
United
that?
States Producer Price Index, MOM, below expectations, 0.3% in February. Actual, 0%.
Did you hear
US
the
initial
weekly
jobless
claims?
220K versus 225K estimate. U.S. February PPI final demand 0.0% versus 0.3% estimate. Year over year 3.2% versus 3.3% estimate.
United States Producer Price Index ex Food and Energy, year over year, below expectations, 3%. In February, actual, 3.4%. United States Producer Price Index ex Food and Energy, MOM, below forecasts, 0.3% in February. Actual, 0.1%.
ADS says, hey, Wayne, how do I sign up for TRADARS? All right. Let me pull up a browser. Get started. Join. Traders.com/join. Easy peasy lemon squeezy. Yeah, so we do have falling inflation, huh? Good. Yeah. Yeah, and of course, ADS, what you want to do is one of these all-in-one packages, because I'm working on something, and again, I may be working on it today, that sometime in the near future, and I'm hoping before April, or certainly by April, there's going to be a ton of new awesome stuff for the pro members. And I'm likely to reorganize these things. But if you are in one of these groups, don't worry. Don't worry. You're going to get a better deal. And then for people that are in these pro sections, you're going to get a better deal. And then I'll probably have one other level. So there'll just be, I think I'm going to call it TRADARS, Traders Plus, TRADARS Pro. That's what's going through the Wayne's brain right now. And everyone gets a better deal. How cool is that? Yeah, but it really depends on how my meetings go later today and tomorrow. Yeah. Let's look at the trend in claims. Yeah, I think so, Jim. I've been working on this new thing. God dang it, 6 months? Yeah. I'm trying so hard. So I'm hoping that I think today I'm one step closer to resolution, but sometimes that means the answer is no. But then I got resolution. May not be the resolution I want, but if it's no, it's no. If it's yes, it's yes. It's the maybe someday is what drives me nuts. I don't like maybes. All right, so let's go back 90 weeks. All right, we averaged 218, and we've been averaging 218 for 90 weeks. You can see 90 weeks ago we were closer to 250, and then, 45 weeks ago we were more like 230. So it looks like I can only go back to 2019. It is pre-COVID, right? So September 17th, yeah. So I can't go any farther back than 2019. So 218 seems to be pretty average. And look at some of these scores here. Wait, this is all 2019.
U.S. annual PPI inflation declines to 3.2% in February versus 3.3% expected.
That's interesting. It's glitching on me. 90 months is probably just too many. 36 months. It's probably having a heart attack, huh? 36. Ah, you son of a... No, it's a weird glitch. March 3rd, it's just, it goes there and does a certain amount of numbers, of quarters. Interesting. I wonder if I can fix this. Advanced. Auto date range. (2022). Interesting glitch. Okay, so that's pre-COVID. Okay, definitely pre-COVID. September 1st, 2018 until today. Start date, end date, selected, fixed, apply. And still, interesting, it won't do it.
All right, cool. Well, we found a glitch in the matrix. I don't want to go. I don't care about 2019, obviously. So the last 30 days, no. This week, last week, this month, month to date, year to date would be probably good. How about just this year? No, I want. Yeah, this year. All right. So again, there's the 218. So we were lower. More people filing for unemployment. More people losing their jobs. Okay. And then we got a big number there, followed by a lower number. Okay. So our average is still 218. What was the number that came out?
Oh, don't go there. BLS, isn't that what I typed in? All right. Okay. I mean, we can go through that. Some good numbers, huh? Yep. Unchanged, 0, huh? That was a big deal, huh? The United States has done more in the first quarter than Europe has done all year. $220. Our average is 218. So above average, climbing. So a slowing down of the labor market, just enough. 220. And then we want to see the revision, right? The previous week's level was revised up from 221 to 222. So the revision there, so 221, so this will come up. Interesting. All right, cool. Okay.
U.S. Producer Price Index unexpectedly unchanged. In February,
U.S. weekly jobless claims, unexpectedly, edge slightly lower.
Oh, Sebastian, I just saw your question about if I gave you a piece of advice.
It's all about planning. It's all about analysis. Trading is the easiest part if you have an intent. If you're just randomly trying to pull money out of the market, one little trade at a time, it's not how it works. So right? So think about it. from a military point of view, you can just go out and find fights, get yourself into battles, or you can have a strategy and plan and prepare. That's what it's about. And, for 20 years, I've been trying to teach people how to do that. And there's been multiple iterations in technology. So if you were a member of FX Boot Camp, I think it was about 15 years ago, we had something like TRADARS. It was the FX Boot Camp News Trader Pro. And it allowed you to do fundamental and quantitative analysis. And it was a Windows application. You had to download it and install it and run it. And then once a week you had to run an update so that it could download the new data. And I could tell you, for example, based on what PPI, I guess I have it here, based on what PPI has done in the past, the average of volatility that PPI produced. So I could say, well, if it's greater than expected, it typically went up 30 pips. If it was less than expected, it went down 12 pips. So we were doing this 15 years ago. So why am I still trying to do something like TRADARS? Because on the psychological side of things, you may lack confidence because ultimately, no matter how good you are as a trader, you don't know what you're doing. You're like, well, Wayne, I trade, a MACD cross and then the next stochastics cross. Okay, that's tactics. You know how to kick down a door. Yeah, that's fine. And most of the time it's safe, sometimes it's dangerous. But you don't know why you're doing it. You don't know what the purpose is. And therefore, that's where the lack of confidence comes from. So the fear of missing out, for example, doesn't exist if you have analysis, if you have a plan, okay? If you know what you intend to do, if you know you want it to go up or down, then you don't have to decide what to do anymore, you know. So for example, pound dollar, based on global macroeconomics, right, is bullish. And it is bullish when you look at the charts. But seasonally, it usually is not bullish. And we know this stuff because we have the data. You can also go to the scorecards and organize things in multiple different ways. So should you be buying pound dollar? You could, but it usually doesn't work. So maybe something's changing. Euro dollar, you could buy it. Sure, it's got a great score. Yeah, except it usually doesn't go up this time of year, but it is. Well, what about pound Aussie? Well, we're very bullish based on macroeconomics. Seasonally, it usually goes up, and technically, it is going up. So now you can say, well, I'm very interested in buying pound Aussie and euro Aussie. Doesn't mean you will, but now you know why, because you've analyzed interest rate differentials, jobs, inflation, GDP, technical trends, seasonality, retail sentiment, institutional sentiment, and you're like, yeah, I have a strong belief that this might just very well be something that I should be focused on today. Pound Aussie and Euro Aussie long is not the dumbest idea in the world. Okay, let's take a look. Pound Aussie and Euro CAD, Euro Aussie. There it is. Okay, cool.
Silver price forecast. Silver to US dollar sees upside above 33.40 on soft US PPI and CPI. Trump tariff fears. Euro US dollar forecast. Euro retreats below key support level.
Okay. So what am I trading now? What are the trades I'm holding? Yeah. And when and why? These great questions. This is what I do Thursday afternoons at 4 p.m. We call it the swing trading group, or at least we used to. Technical trading group. I think it's still the swing trading group. Anyways, so you should join TRADARS, and we'll probably talk about that. I think I only have 90 minutes today because I got my training, my emergency response team training tonight. Okay? But all that's easy. Okay, so like, for example, all right, so we're interested maybe pound Aussie, Euro Aussie long. Okay? The patterns are bullish and they're under threat. So, and there's nothing on small time frames. Isn't that cool? But notice this. Our Euro Aussie has been bullish for a while. And look how bullish it's been. Okay? So now you're going to call BS, right? Bullshit. Okay, now it's already happened. Great, it already happened. Well, how long ago did TRADARS recognize, based on macroeconomics, the opportunity for Euro Aussie long? How do I do that, Wayne? Oh, well, once again, that's easy. We have the data. Okay, Euro Aussie, for example, is right here. Cool. So, we went bullish February 26. Like neutrally bullish and then aggressively bullish at the beginning of March. So the end of February, the beginning of March. Okay? You mean February 26 is right here? Okay? Fundamentally, this is when we fundamentally went from bearish. Well, I guess I shouldn't draw up, right? We went bearish, neutral, and then bullish. And we've been bullish ever since. Huh? It's just that this is recognized 2 days ago that there's been a big up and there's a high probability of a retracement and then a recovery. So this could be, for those that are bullish, and we're still bullish, a cautionary tale of maybe take profit. Oh, because a sizable move already occurred over the last 17 days. It's up 5.71%. Oh my God, this is so awesome. All right, so is there room for that profit taking? Well, let's take a look. Let's do some technical analysis, because that's just pattern recognition. Okay? Now, let's talk. I have 3 rules for profit taking. Okay? There's could, Is that how you spell could? That doesn't look right. Should and must. Okay. What level, according to the rules of engagement, because remember, we're talking about profit taking, what level could I take profit if I was a bull? Right? Or could start? Or could lock in profit? But react is the way to think of it. What is the could take profit price? Please type it in.
Gold sticks to a 0.50% profit with U.S. officials meeting Russian officials in Moscow. Initial reaction, stocks still negative but off lows. Yields in U.S. dollar not biting, higher.
Okay. M4. Okay. All right, what's the next one? Should. R2. Must. R3. Okay? This is what I teach. Okay? It's in the training courses. Okay, let's identify. M4 is here. Did it gain some respect? Yes. Did everybody get out? No. Remember, we were bullish since the 26th, right after the cross. Okay, great. So the next one, you should take profit. Okay, that occurs here. Did people respect that price? Yes, but the market remained bullish despite that. And then we get to must. When must you take profit? Okay, right there. So now so this is what you should know this. This should just be easy peasy lemon squeezy. So then you combine all of this and you're like, okay, well, we got a cross here, so technically you're bullish. But here we became fundamentally bullish after being fundamentally neutral. Notice that we hit the February target for bears. We should be neutral. We hit the green zone. Then we got a 5-8 cross, or 2155 cross, which means on the hourly, okay, we got a higher high, higher low. It's the only way you can do it. And then fundamentally, a day or two later, when you analyze all the macroeconomics from comparing European and Australian GDP to inflation, to jobs, to retail positioning, to institutional positioning, to statistics, to all kinds of things. This is where you get permission to be a buyer. And then we analyze this. You could take profit here. You probably should here, but you have to take profit there. And now our patterns are starting to show, like I showed you that big pattern was drawn like this. Yeah, there's probably, just based on the pattern, not on the pivot. The pattern isn't thinking about the pivot. It's just a pattern. The pattern suggests this is a time to probably take some profit. Doesn't mean it's going to reverse. Just means profit taking is likely. And then when you use pivot points, yeah, you should have taken your money. Like this was an option. There, you didn't have an option here. That's a hard rule. Get out. And we see this throughout TRADARS. statistically, fundamentally, and technically. And it's in our rules of engagement as traders. And you have all of this at your fingertips. You should know this. Okay? You should know this. Versus like an amateur that doesn't want to do the work is going to look at that and say, oh, well, that's a buy signal. Well, we don't do signals at traders. Yeah. If you want me to make trading decisions for you, buy my ETF. Okay. Cool. I'm also thinking about building my charitable endowment so that you can onboard with a wealth management team that will put you into my portfolio if you wanted to do that. Which is more than wheel. Peerless ETF has wheel. So if you want us to make trading decisions for you, well, we'll just do it. Buy the wheel. You can pull it up. Boom. If you want to buy my endowment portfolio, which is wheel and a bunch of other things that we do at the CIA, not a problem. I'm thinking about doing that too. So you can onboard at Peerless Wealth. I haven't set it up there, but I'd be part of Peerless Wealth, not just Peerless ETFs. And then you can have my endowment. Sweet. But if you want to make your own decisions, you need to know how to trade. So you look at that. If you know how to trade, that's not a buy signal.
639.1 bead from previous 632.4 bead.
So,
U.S. stocks may move back to the downside amid ongoing tariff threats.
Right. So if you're not sure about this, download the chart pattern cheat sheet, which is in the description below the video. Okay? So you should fundamentally know you're a bull on this, but you should technically know, or let's say statistically know, that this is not a bullish pattern. And then third, you should know how to do technical analysis. At the very least, you should say, oh my God, I missed this. So what am I going to do in the future? Well, what you probably want to do in the future will look closer to like this. Have it, right? Now you do some technical analysis on your charts. Now you just know to look at this. You're like, oh man, I missed this. This thing's up 6% this month? Oh my God. So you missed it. So what? Now you know. Now it's on your radar. So how do you trade? Do you buy it at March R3? No, of course not. What are you, a knucklehead? So what do you do now? Well, there's many ways. You can look at April pivot points. Or, a typical technique is to do a Fibonacci study. Okay, 50%, 382, 618. Okay, and then I eyeball this, and I'm like, ooh, that looks like a 618. Aha! So now that's price action and Fibonacci in lieu of pivot points. So what's your new strategy for the future if you saw this? By the way, you were given a heads up 2 days ago. Did you look at that chart I showed you? We were on the R3. So what's your next move, bro? Oh, this would be epic. Yes, that's how you trade. Will it do that? Nobody knows. Yeah. See, the threat is profit. So notice this. Notice this. This could be the short term. It falls for 2 weeks and then rises for 2 months. Oh. Same thing over here. Same. Same. This one's only up 4%. Well, the euro's been stronger, but we've known that. Okay? What kind of fundamentals do we do for the stock market? Okay. Click on fundamentals. Sorry, this comes up because I'm logged in as an admin. Okay. Wayne, help me with the stock market. Okay. It's not very complicated, but sure. Which one do you want? So I'm neutral on the S&P 500. Statistically, it's down. Seasonally, we're coming up to a point where this will change direction. Oh, that's easy. What about the FTSE? Yeah. What about Nikkei? What about the DAX? You like the German stock market? Yeah, I know everything there is to know about the German stock market. I know I have a rough estimate of what I think what lies in the future for the German stock market. I know statistically it's bearish. Statistically. I know seasonally there's an improvement coming and then a collapse. Okay, cool. So I can help plan the future. I'm tracking things like PMI, manufacturing and services and retail sales, and tracking jobs and everything. It's great. I know everything there is, and I can do it in seconds. Okay? For example, Russell is bearish, but an improvement is coming. So somewhere between our March and April, which is now. So what I was coaching yesterday and the day before and the day before that, I think since Monday I've been saying, hey, but somewhere between March 15th and April 15th, I have a theory. I might want to buy the Russell. Okay, great. So we call that bias. We call that strategy. I have a theory. It's falling. I understand that. But between March 15th and April 15th, what if I find reversal patterns on key levels of support and I notice changes of direction? Can I take the shot? Yes. So in the next 2 weeks, 3 weeks, 2 days, 3 days, if I see the opportunity technically on my chart, I have fundamental permission to take a shot long with anticipation of April, May, June being more bullish and bearish. Is it going to happen? I don't know.
Pound sterling
Will the
weakens
first
against US
opportunity
dollars
be the best one?
US
Probably
CPI
not.
and PPI.
US dollar pops on weaker PPI numbers.
Trump family has held deal talks with Binance following crypto exchange's guilty plea.
Pound US dollar forecast faces resistance 13th March 2025. BTC US dollar forecast Bitcoin volatile ride 13th March 2025.
Okay, so I can take that, combine it with price forecasting, or combine it with technicals. I can combine it with seasonality, but that's what this is, a seasonality. So I could say, all right, the Russell, or we can pick something else. Dow. Okay, Dow usually improves pretty soon. Is it bullish? No. Could I think about it? Yeah, I could think about it. So now you go, okay, well, is there a pattern? Well, what am I interested in? The first pattern would be a reversal pattern. Okay, the first pattern would be a reversal pattern. So let's go to indices. Let's say we only want to look at Dow. We're bullish, not necessarily now, but in the next 4 weeks, we're thinking about buying Dow. Okay, so I want to see key levels, maybe Fibonacci patterns, which include Gartley reversal patterns. Okay, yeah, sure, we'll throw that in there. Trend patterns. Yeah, I don't think it'll be trending up yet, but let's take a look. And then we'll throw in consecutive and big moves. Okay, let's throw everything at this. We're bulls. And we know it's not bullish now, but our hypothesis is that it could be bullish later. And we also know through our analysis that I could hold it, if I get it right, for 3 months. Maybe 4. Holy schnicker. Everyone else trades blind. So let's trade with our eyes wide open. Okay, we're a bull. Is this an opportunity? No. We're a bull. Is this an opportunity? No. Is this an opportunity? Not yet, but if it does that, then we can look at a dip. That's on the hourly chart. Okay, we're a bull. Is this bullish? No, but it's signaling that a reversal may be developing. I'm a bull. Is this bullish? No. I'm a bull. Is this bullish? No, but bearish profit taking could start to occur, which would be the first leg of maybe a reversal, and then maybe something that becomes bullish. So is there a trade? No. Is it ready? No. All right, let's go to the Dow. Here's the Dow. Is it ready? No. Is this a good price? Maybe. But is that bullish? No. But my theory is in the next 4 weeks, it will become bullish. So if I recognize a change earlier, then I have the opportunity to get in. I'll also understand I'm probably early, but I'm getting in before most people. I'm not going to benefit until most people agree with me. So in the beginning, what you want to do is be very conservative, maybe cut your lot size and kind of get in small, and then start building up your position, because your intention, if you get a profitable trade, is to add another profitable trade, and then add another profitable trade, and then add another one. What about taking profit? No. Your analysis shows you that you could be in this for 120 days, not 120 seconds, not 120 minutes, not 120 hours, 120 days. Holy smoke. Hope's talking Bitcoin. Let's change our direction and talk about the biddy. Okay. Cool. So it looks like we've closed a gap. Okay. And so the next wave, if this continues, that's the part we don't know. We don't know if it'll continue. But if you thought it was, you're going to look for a role reversal there. Okay. So that takes this trade, which we already did. Okay. And then there's a maybe potential for this trade now, right? Cool. So you caught that, Hope? Sweet. Cool. Nice.
France's overseas trade minister, we will not yield to threat and will protect industries.
Bay Street seen opening with negative bias. Congo is attending Angola-hosted talks with M23, sources say. Analysis record, OPEC plus fuel exports. Blunt Group's crude supply cut.
You guys having fun? Did you click the thumbs up? So today at 4 p.m., we have our swing trading meeting. Make sure you RSVP so you can get the links emailed to you. Swing trading. Cool, right? I gotta close these. Cool, right? Cool. Yep. Tomorrow at 3:45 a.m., scalping the London Open. Tomorrow I'll be at FX Street. Again, please RSVP. Okay, you just have to click going. That's sleepy time for me, so I'm not going to attend. But it might not be sleepy time for you. Cool, right? I know. Cool. Let's do some reading. Euro pound, neutral. Euro Aussie, positive. Okay, so these are neutral and these are positive. Now let's do Aussie. Positive. Interesting. Because we were looking at Euro Aussie, right? Yeah. Okay, very negative on USD Swiss franc. Okay, but I'm a bull, so this just lets me know, not now. Okay, another big score, pound yen down. Next big score, pound dollar up. At odds, huh? Next strongest score, euro yen down. So yen strength here, yen strength there. Euro dollar up. Aussie dollar up. Silver up with a 32. Kiwi dollar down. Wait. Aussie dollar up. Your Kiwi dollar down. There's some bad news, some bad feelings going on for the Kiwi. Yeah, tell me more, tell me more. Okay, let's read all the articles. This is me reading. Okay, I just read 21 articles on 4 different websites, all Forex related. Nice. Great. And the 21 articles on 4 different websites are generally negative on Kiwi dollar. And it's been that way for a while. So this is market sentiment. This is what the 21 articles this week, that's just this week, on Action Forex, FX Street, FX Empire, and Forex Live. They've been talking about Kiwi dollar more than average. And it's not a favorable outlook. And in fact, it could be getting worse. We don't know. But it went from negative 18 to negative 25 since yesterday. My troubles seem so far away. Yeah, just since yesterday. Well, at one point, we were at 55, and now we're at negative 25. Oh, yeah. Okay? Now, check this out. The truth is, lots of articles were being written in this period, and that was favorable at that time. And then on the 24th of February, something happened, and it's no longer in favor. And you can see it right here. Maybe news came out. Maybe it was jobs. Maybe it was GDP. Maybe it was trade balance. Maybe it was something out of China. But one day changed everything. Oh my God. Oh my God. Yeah. So I wonder if it's going to continue back around negative. Well, that's helpful to know that that's how the rest of the market is feeling. Or at least to say differently, that's how people are writing about it. So the reason you read other, because it's not reading economic reports. That's what fundamentals are. This is articles that are just discussing Kiwi dollar. And you have to read them and say, well, what is the context of this report? What is it favorable? You know? Yeah, the all-knowing pundits. But look, if negative news came out on the 24th of February regarding Kiwi dollar, well, you can't go to those four. Well, you could. You can go to those four websites and read the articles. That's true. You totally could. And you're like, ooh, something changed and Kiwi's not red hot anymore. But the thing is, most people miss that. They miss it. They don't know that something important has happened and the change is immediate. But now we quantify it. Something did happen, right? Something did happen, something did change. And that's the fact, Jack. Something happened and the market is no longer looking at Kiwi favorably. It was very, focused on Kiwi. Now, no so much. Okay? And so, once again, you can see it. Boom, boom. Okay? 24th to 25th, something radically happened. Oh. Okay. Now, that's not looking at a chart, is it? No. No, it's not looking at a chart at all. It's not even doing macroeconomics. It's not doing all that stuff that you already do. Why would I need to have another page that does exactly the same thing as your macro? No, this does something completely different than your macro. It's how do people feel. Okay? And it looks like it occurred just before that, huh? Yeah. The 24th, I think we said, right? Here's the 24th. Oh, yeah, that's about right. Yeah. Cool. Yeah, so something occurred in there, and the market noticed it, technically, but most likely it's fundamentally based. And the articles that have been written were bearish. In fact, much more bearish than they are now. They're still bearish, but during this rise, they remained bearish, just less bearish. And then the question is, here we are today, is it going to become more bearish again? And we're tracking this by reading articles. It's pretty cool, huh? Stock market's opening in a few seconds. About 90 seconds? No, 120? 180 seconds. So I'll bid you adieu. Peace on earth. May the pips be with you. May your profits be above average. Thank you for using Trader's Way. Thank you for using TRADARS. Thank you for being part of this YouTube community. If you want to use the Squawk Box, that's on the TRADARS channel, youtube.com/@TRADARS. And it's a free version of the Squawk Box. What we call the Headline News Radar. So again, peace on earth, may the pips be with you.
Great. Pantheon Macroeconomics sees core PCE up 0.3%.
May your profits be above average.
Year over year to 2.8%.
Isn't that cool? Hey, trader.